and welcome to another episode of Financial Festivities, hosted by yours truly, Grant Preves. Today is Monday, October 25th, 2021. Today we're going to be talking about a ton of cool stuff. I'm super excited because today I'm premiering a new segment I'm coining Amateur Analyst, where we take a look at a specific company and its stock and delve into their financial figures. But before we do that, I'm also going to be talking about the importance of understanding how to read a company's balance sheet and understanding some of the key figures that often appear on a balance sheet. And then finally, kind of talking about some popular metrics that people derive from these financial figures and how to read them as well. But of course, before that, let's take a quick overview of US equity markets and see how American stocks have been performing over the past week. So again, today is the 25th of October, a Monday night. The Dow closed at 35,741.15 points, putting it up 1.18% on the week. The NASDAQ composite closed at 15,226.71 points, putting it up 1.02% on the week. And then the S&P 500 closed at 4,566.48 points, putting it up 1.54% on the week. So again, another spectacular week for the market. And then finally, I decided to add in Tesla's price because that is the specific stock we're going to be talking about today eventually. Today, Tesla closed at a whopping $1,024.86 a share, putting it up 12.66% not on the week, but on the day. So Tesla rose over 12.5% today, or over $100 a share. I did absolutely phenomenal. I believe, yes. So today is the first time Tesla broke $1,000, not in the history of the stock, but since its most recent stock split. All right. So before we get into Tesla and start talking about the individual company, I want to be kind of talking about the importance of balance sheets and some pretty important figures that often appear on said sheets. So balance sheets are often can often be found in the quarterly and annual reports that publicly traded companies have to submit just to the general public quarterly and annually. This is required by the Securities and Exchange Commission, often abbreviated as SEC. The SEC requires that these publicly traded companies adhere to certain regulations, some of which obviously include making their financials clear and transparent to the general trading public. So there's tons of figures on balance sheets, way too much to kind of cover all of them today. So I'm just kind of going to give you guys an overview of the few most important figures I believe are. The first of which is revenue. Revenue can always be found on a company's balance sheet. So revenue is probably the most simple way to generalize the amount of money a company is receiving from its operations and business. So revenue just kind of is the income a company is receiving from selling their goods and services. So it doesn't take in any costs into account. So if you wanted to, I guess, give a formula for revenue, it would just be the number of sales times the price of those sales. That would kind of give you the overall number of revenue. Revenue is a great stat. It's something, we always look at when a company releases its financial reports. But there are more specific stats or, figures available to give us a gauge of how much money not only a company is taking in, but how much they're actually retaining and earning. One of which is gross profit. Gross profit is rather similar to revenue, except for something very specific. It's essentially the income from the sales of a company, but also the cost of the good, the cost it took to produce those goods is subtracted from the value. So a formula for gross profit would just be revenue minus the cost of goods sold. So for example, Tesla sells its cars and it receives revenue from from customers paying for those cars. But if you wanted to calculate gross profit, you would take the revenue they received from those cars, but also you'd have to subtract the cost of actually constructing the cars in terms of all the parts and things of that nature. And then finally, net income is the most specific figure that gives you a view of how much of the earnings the company is retaining. So net income is literally just like gross profit, but along with cost of goods, all other business expenses are also taken into account. So if you wanted the formula for net income, it would be revenue minus cost of goods and services, so essentially gross profit, and then minus all other business expenses. So it's essentially just gross profit and then subtracting all other goods or business expenses besides just cost of goods sold. Some of these quote other business expenses include operating expenses, like income tax, property taxes, interest on debt owed, depreciation of fixed assets, like machines and things of that nature. And then yeah, so that's pretty much kind of the difference between revenue, gross profit, and net income. Three very important figures I would know moving forward. And then a couple other figures that are good to know are assets and liabilities and the difference between the two. So assets are just essentially anything a company kind of owns or has possession of that has a positive economic value. So some examples of assets, might be cash or cash equivalents or, highly liquidable investments. And then the opposite would be liabilities, which are a negative on the balance sheet. They're things that take away from the value of your company. I'd say the best example of a liability would be, debt to a bank or to another entity or something like that. Short-term debt, long-term debt. There's all sorts of different, ways to classify it, but I say debt is probably, the largest example of a liability. So I'd say those are probably the most important things to understand for a balance sheet, just knowing what those figures are and being cognizant of that. However, although it is great to know how to read a balance sheet, I'd say unless you're a professional, you're probably not going to have the time of day to individually look at different companies' balance sheets. So that's why kind of the investing world and Wall Street have put together these easily digestible metrics that help everyday investors like you and I be able to better decipher the performance of a company. So I'd say some of the most important ones, the first of which is earnings per share, abbreviated as EPS. Earnings per share kind of gives you an idea of, per each individual share of a stock of a company, how much earnings are actually regulated or given to that specific stock. So EPS is calculated just by taking that income, which we just talked about, and then dividing it by the number of shares outstanding. So that's a rather important figure. Obviously, I guess in theory, the higher the EPS, the better, because that means per share, the company is making more money. However, you can't really compare earnings per share between companies because all companies publicly traded have a different amount of shares that are available to the public to be purchased and sold. So it's not a very useful metric to compare. However, P/E ratio is, which essentially stands for price earnings ratio. So what that does is you look at the actual price of a share. So let's say company A currently costs $50 to purchase, and then you divide it by the earnings per share of that company. So let's say company A has an EPS of $2 a share. You take the 50 divided by 2, and you get 25, and the P ratio is 25, which means you are spending $25 more. You're spending $25 for each dollar of net income that company receives per share. So I guess technically, in generally speaking, the higher the P ratio, the more overvalued the company is. So you're looking for lower P ratios. It varies industry to industry. So again, I guess you can compare companies, their P ratios. It doesn't give a complete picture, but a low P ratio can possibly indicate that a company is undervalued and that it might be worth taking a closer look at their financials. And then along with P ratio and earnings per share, there's also debt to equity ratio, which kind of gives you an idea of how highly leveraged a specific company is or how much they're relying on debt to kind of finance their operations. So obviously, if a company is relying too much on debt, that's kind of detrimental, especially in the automotive industry, like Tesla. So debt to equity ratio is just taken by taking the total liabilities of the company. We just talked about liabilities and then dividing it by the difference between total assets and liabilities. Another term for the difference between those two figures is shareholders' equity. So essentially, the formula for debt to equity ratio is total liabilities divided by total shareholder equity. Again, this metric can be compared between companies, but it is more useful when you're looking at sector to sector. So, for example, for Tesla, you probably want to compare their debt to equity ratio to other car companies and not a company, let's say like Goldman Sachs, who's in the financial service industry. But generally speaking, just to give you guys a rule of thumb, um, any debt to equity ratio over two is likely a red flag. So you want to see figures below that number. So that's kind of just, I think those are the most important things you need to know in terms of understanding for a balance sheet and then some of the most popular metrics. There's hundreds of thousands, probably most likely metrics. You don't need to know all of them. Those are probably the most important ones. If you guys truly are interested, I'm going to leave a bunch of links in the description of the podcast, just so you guys have further resources if you're interested. But now we're going to finally get into specifics of Tesla. I know Tesla is a hugely popular as of late. I know, so many people love Elon Musk and look up to him. I was almost like a, godlike figure. They just think he's a genius and things of that nature. And they thus think Tesla is going to be extremely successful, which it has been, to be fair, of late. But just a couple of things about Tesla before we get to its specific Q3 financials, which again were released the last Wednesday. So Tesla again released Q3 earnings. They surpassed projections, which is always good. Whenever you surpass projections, that usually means good news for your stock price the next morning. And then the big news of the day, this is the primary reason why Tesla stock shot up over 100 points and 12.6% today, was because Hertz, the car rental company, agreed to purchase 100,000 Model 3s from Tesla. The Model 3 is probably Tesla's most popular car model, as it's probably the cheapest. And more big news, Tesla today surpassed a market capitalization of $1 trillion for the first time. I believe it's the fastest publicly traded company to do so. There are very few companies that even have a market cap of 1 trillion, some of which include, Apple, Microsoft, and things of that nature. So the fact that Tesla was able to do it the fastest is quite impressive. And naming some of those companies, like I just said, kind of gives you an idea of the company Tesla is, a part of. And then Elon Musk, great day for him. He doesn't, as some of you guys might not know, Elon Musk doesn't really pay himself a salary. Basically, his whole net worth is just made up of, his holdings in Tesla in terms of actual shares of the company as well as stock options. So as of today on Monday, Elon Musk's holdings in Tesla are now worth $230 billion. So obviously he's the richest person in the world, by quite a large margin. So now going into the specifics of Tesla's Q3 financials. Really quickly before we get into Tesla's quarterly three financial report, I'm going to make a distinction between GAAP and non-GAAP figures. This is something that'll come up when we're talking about Tesla's balance sheet. So GAAP just stands for generally accepted accounting principles. So this is it's the set of like rules that companies kind of must adhere to. They're established by the SEC. It's just kind of like a general like accounting rule, so people are on the same page in terms of reporting numbers the same way. However, companies are allowed to report non-GAAP figures as well as GAAP figures, as long as they make a distinction between the two. So just the difference between the two non-GAAP figures usually leave out like unusual like one-time expenses. Like if a company's ever like acquiring another company, things of that nature. It's not a huge detail, but just in general, non-GAAP numbers like likely tend to be greater than GAAP numbers. Thus, why most companies also like to report that. Uh, Really, you have to take it. Just depends. Non-GAAP figures aren't necessarily unreliable. Usually it's a case by case basis. That's why you got to look at both non-GAAP and GAAP figures. It's just important to know that the GAAP figures are technically the official, SEC figures that they count as being valid. However, GAAP can sometimes give you an incomplete picture of a company's success during a particular period. So, looking at some of Tesla's financials, we just talked about now that you guys kind of know that some of the big buzzwords in terms like that. Tesla for Q3 took in $13.76 billion in revenue, putting it up 57% since last year of Q3. And total gross profit was 3.66 billion, putting it up 77% since a year ago. Net income gap, like we just talked about, was 1.62 billion, putting it up 389% since a year ago. Net income non-GAAP was 2.09 billion, so nearly 0.4 billion bigger compared to the gap figure, putting it up 433% year on year. And then EPS, this is really one of the most important figures that we mentioned. It is a metric, but since it's highly looked at, companies often put it on their balance sheets. So diluted EPS was 1.44 GAAP, putting it up 433% since a year ago. Non-GAAP EPS was 1.86, putting it up 145% since a year ago. So those are just a couple of the financials that we talked about and for Tesla. So obviously, absolutely phenomenal. There's in every category significant growth from a year ago. In terms of expectations, before any company releases their data, there's kind of what's the word? There are estimates or kind of expectations that are set for specific metrics. So for EPS, Tesla 1.86 or 1.44, depending on if you look at GAAP or non-GAAP, beat expectations by 15.22%, and then revenue beat expectations by 0.4%. So whenever you beat expectations, it's definitely going to be a boost to the stock price. You always want to see growth from the last quarter or the last year, and then obviously beating expectations is just fantastic. So in terms of automotive deliveries for Q3, Tesla produced 8,941 Model S and X vehicles, which is actually down 40% since a year ago. This is largely because during last year in 2020, Tesla had to shut down production of S and X models completely. I believe, and yes, in Q1 of 2021, which was earlier this year, Tesla produced literally zero Model S and X models, which kind of explains the dip over the year. The reason was because they were creating kind of new models with S for the S and X, and then experienced trouble. I believe part of which was probably due to the semiconductor and chip shortage. But that's why they're down. However, Model 3 and Y production, they produced 228,882 Model 3 and Y vehicles, putting it up 79% since a year ago. And the total production in Q3, Tesla produced 237,823 vehicles for 64% growth since a year ago. And then deliveries were also quite well. On the quarter, Tesla's Model S and 3 deliveries, again, we're down because of the same reason we just talked about, down 39%. However, they are up. They are up since Q1, obviously, because they are now starting to deliver more. And then Model X and Y deliveries is up 87% since a year ago. And then total deliveries are up 73% since a year ago. So, I mean, obviously great numbers. That's what you want to see. Um, how that relates to the stock price, that's not my area to talk about, nor what I want to talk about that. All I can say for sure is that Tesla did knock it out of the park in Q3. Um, Part of that, might be related to, things improving from COVID. I'm not going to say that this growth is sustainable at all. But it's just good to see, especially if you are a fan of Tesla. However, kind of just to bring things back into like just to contextualize the situation, like Tesla is has a market cap of $1 trillion, as we talked about, which is the largest by far of any automotive car company in the world. Toyota is a not so close second. The market cap as of today is around 240 billion. However, don't use market cap whatsoever to kind of justify or to like give credence to the how valuable a car company is, because I'd say literally by every other metric, technically Toyota is a way more valuable car company than Tesla. For example, in their 2021 Q1, they're just on a separate fiscal year policy compare or fiscal year calendar related to Tesla. Um, in Q1 of 2022, Toyota brought in 7.94 trillion yen, or $69.8 billion in revenue, which is multiple times greater than Tesla. Net income was 897.8 billion yen, or 7.9 billion USD. Several multiples greater than Tesla. P ratio of 9.23. That means that for every dollar of earnings that Toyota has earned, you're only paying $9 more for it, which sounds bad. But then you look at Tesla, who currently has a P ratio of 332.57. So P ratio, again, like we talked about, can be used to gauge whether or not a company is overvalued or undervalued. So since literally currently for each Tesla share, you're paying $332 for each dollar of earnings Tesla has earned. So that's not great in terms of that. Clearly, the Tesla stock price is overvalued. That's a fact in terms of literally just looking at the financials. I'm not saying that Tesla stock price will go down, but literally, or just like from a pure financial balance sheet point of view, Tesla is overvalued. That doesn't mean again it'll go down or up. Just that's a fact. It's overvalued. There's several other companies that are overvalued though, but doesn't mean the price is going to go down. Debt to equity ratio for Tesla is 0.97. So there's nothing wrong or significant in terms of debt. So that I just kind of showed you. And then finally, another fun stat I told felt like, talking about just to put things into perspective even more. In Toyota's Q1 for 2022, which we're comparing to Tesla's Q3 for 2021, they sold 2,759,000 vehicles, putting them up 149% since a year ago. So they're literally selling, magnitudes more cars than Tesla. So from the perspective of revenue and income and sales, Toyota is more valuable, yet Tesla has like a 4 to 5 times greater market cap. So that's why I just want to put things in perspective for people, because Tesla is a high growth company. There's a lot of excitement. People expect future growth. That's why their stock price is so high. You have to realize that when you're looking at the price of a stock, that's not it's not just a reflection of their current performance, but it's also kind of a reflection of how people expect the company to perform. So Tesla's high price relating to its current earnings is just telling you that the market thinks Tesla can do extremely well in the future. Toyota is obviously a more established car company. They're not going to be growing as much as Tesla. So that's kind of why their PE ratio is more down to earth and things of that nature. So that's just kind of a breakdown of Tesla's financials. Again, I'm not going to tell you to buy it or sell it. It is doing quite well, but past performance does not guarantee future success. Quote I'm going to end the episode with is from Elon Musk himself. the CEO of Tesla. He said this in 2019 at a Tesla Autonomy Investor Day. He said it's financially insane to buy anything other than Tesla. It would be like owning a horse in 3 years. So that just kind of gives credence to Musk's confidence for Tesla and how he really thinks it's going to pioneer the future technology that all of us will be using. Obviously, Tesla has kind of been experimenting with and has made significant progress in terms of self-driving and autopilot. So it'll be interesting to see how things progress. Again, I'm not going to tell you to buy or sell. If you are going to buy, just make sure it's not money you're going to need in the future or the relative near term, because you don't want to lose money you need. So I just thought it would be fun to talk about a company today. We talked about Tesla, extremely popular. That has been the first segment of amateur analysis. So I think that's going to be it for the podcast. Again, I really appreciate you guys tuning into the episode, and catch you on the next one.